With that, Kyle, I think we can jump right into our main topic, our
Let's go for it.
stablecoin securities. Well, this topic is actually incited by some recent news, actually. Specifically, last week, Representative Sylvia Garcia from Congress introduced legislation to the House Financial Services Committee to regulate stablecoins under the Securities Act of 1933. This comes in response to, of course, the Libra cryptocurrency plan, which is introduced or at least credited to Facebook, which has created a lot of confusion within Congress, specifically around how this affects the US economy and what Libra actually ultimately is. It seems to have changed the conversation from Bitcoin to blockchain, or at least to stablecoin, which is now creating sort of a new cause of confusion, hence why there has been this focus and the representative reaching out to the House Financial Services Committee about defining them as securities. Now, stablecoins aren't by design meant to be securities. And it's very interesting because the CFTC in July testified that Libra looked very similar to an exchange traded fund and therefore is a security. And thus, as a result, it seems like trickling down, it's defining all stablecoins as securities. In the past, we've had conversations about XRP being a security, which can also be seen as a stable coin. There's lots of different questions around how and what is a stable coin ultimately and how it should be treated. So Kyle, let me start off by asking you, what do you think how do you define a stable coin?
So I think you can break a stable coin into three different types. You've got commodity-backed, currency-backed, or actively managed. And so the first example, commodity-backed, is something that predates crypto. And when you look at fiat currencies, the formation of fiat currencies. And so when you look at the formation of the US dollar, for example, and all the way up until 1971, you could exchange your paper dollars for gold, right? They pegged the dollar, the value of a dollar, to a specific weight in gold. And so in 1971, right before the gold standard was removed from the dollar, I think it was about $20.80 per ounce of gold. You'd be able to go and make that purchase and exchange your dollars for that amount of gold, for 1 ounce of gold. And so when you have a commodity-backed stablecoin, essentially what you're doing is you're saying we're creating this digital asset that's bound to a collection of a specific commodity, whether that's gold. I've seen it for things like cobalt, actually. I've seen it for other rare metals and materials and all different things there. And so we're talking about high value assets here, and the ability is to capitalize on the efficiencies of the security tokens that existing in existing commodities markets. So this is nothing really that new. It's the same thing that you can buy a share of a gold ETF on a stock brokerage, and essentially what you're buying is the price of gold and holding that over time as it increases and decreases based off of demand. So that's commodity backed. Hard for me to see that being a security, Herwig. You're not really making an investment in anything. I mean, even if you're calling it that colloquially, you're still just buying a commodity. Hard for me to see that being a security. Second type is currency backed. And so this is most similar to some of the current currencies like the dollar, euro, or yen, and would function similarly to a pegged currency in traditional Forex. So when you have in traditional markets a country like Singapore that uses the US dollar, they peg their currency to the US dollar so that it just has the same price. And so it's essentially the same. They lose a lot of the freedom of being able to decide monetary policy, obviously, because they've given that responsibility to another country. But again, you're pretty much just following the price and the trading value, the exchange rate rather, of a larger, more established currency, and then leveraging that in your own economy. And so again, just like a commodity-backed token, this doesn't seem like a security to me because you're really just following a traditional currency. And again, currencies aren't considered securities. So therefore, if you're just following the price of a security with no change in value, that thing, it's hard for me to see that being a security. Examples of this in stablecoin form do exist. Tether is a huge example, certainly the largest, most well-known example, where there's an issuer that holds a large pile of this currency in reserve and then issues their own Tether tokens at a 1-to-1 value for a certain amount of dollars that they have in their reserve. And this actually allows them to function as almost a bank where they can issue and distribute currency for other users. And other examples of this include stablecoins formed by the Winklevoss twins called the Gemini coin, or DAI by MakerDAO. There's certainly many others as well.
Circle, JP
Morgan certainly is one that's maybe more of an internal exchange rate coin, as opposed to, I think, certainly with the other ones we've referenced, they're more user, just kind of widespread adoption currencies. So it's an interesting example. I certainly think that this is, again, hard to find that it's a security. I can see regulators being a little bit worried of allowing for, again, like a company like Tether to be able to issue and distribute their own currency and to be able to print seniorage on that. Again, I think there have been some concerns over whether Tether actually has all of the money in their reserves that they say they do, right? So if they've issued $40 million worth of Tether tokens that are supposed to be backed 1-to-1 and only have 13 million in the bank, who's holding them responsible for that? That can get out of control quickly, right? So I can see there's certainly being some pushback there. But again, it's hard for me to see that being a security. It seems like it would be more like they'd need to get a banking license before they could actually issue that. But that's, again, outside the scope here. I don't believe that's a security. The final piece here, the final type, is a actively managed stablecoin. And so this is similar to what Libra was announced as originally. It seems like they may be backpedaling a little bit as they realize that this is maybe questionable grounds. But Facebook announced this year that they would have a large portfolio of international CDs and short-term, low-yield government bonds. And so with these bonds, the risk is essentially zero because, the Bank of Germany or the U.S. Treasury or, all of these large financial institutions would never let a short-term bond default, right? So the risk here is almost zero. It also pays a almost zero interest rate. It's relatively small. It's less than 1%, usually maybe 1.5% at maturity. And so Facebook originally wanted to issue their Libra token that was backed by a pile of all of these different international CDs. And so they also had if you remember, a dual token model. So they wanted to have their stable coin that people could use and purchase and exchange within their system. But they also had a security token where those investors would actually reap the rewards of the interest rate gained on those government bonds. So again, as I said, if they had a 1.6% interest rate on their 2-year fixed income treasury bond, the investors in the security token would be referred that 1.6%, and then the stable coin would be backed by that original value that was used to invest in the CD. And so this is still a stable coin, right? Because you're putting it in almost zero risk. Again, government bonds are the most zero risk you can really get in the market. So you're putting them in the most zero risk bonds. You're generating a small return, but at the end of the day, it's backed by those bonds. However, actively managed here. This is a piece that I think is hard to get over in the sense of there's a security token, it's being distributed, and this asset is collateralized by an actively managed portfolio. Regardless of what that portfolio is, it does seem like it by definition is an actively managed portfolio. And this is one where I can see how regulators were not as excited to let this one come out. While, again, it is low-risk CDs, that line could be blurred. Who knows what those restrictions are placed on it. And so because of that, it does seem like this could be a security.
Yeah, that is also what the CFTC said, right? And the key word seems to be here the active managed component. It seems Libra that it's best to bifurcate the two by creating a security token, specifically taking the profits of the stable coin, if you will, and separating it out into a regulated investment vehicle. But at the end of the day, it still remains the question around, okay, but even though there's a stable coin linked to it, that stable coin is linked to an active managed basket of assets, and therefore does that then translate into the other token as well? Certainly very confusing, and we're not going to pretend to say we have the answers on the show, but we can do our best to really dig into it. And funny enough, I think this is great that it's our topic this week, because a couple of weeks ago at CIS, my compliance panel that I moderated, I was actually having a conversation ahead of time with my panelists, both an attorney and an accountant, and I asked this very question simply because we too are confused, to say the least, around what stablecoins are classified as. And ultimately, it came down to that sort of famous little rule, the Howey test, and the attorney, though certainly not giving any type of legal advice, assumed that because the intent was to use a fixed vehicle without an appreciation of value, without necessarily a component of active management, which I think comes into really the key component. But if the purpose of it is to act as a representation of a commodity or a currency that's meant to be pegged, and it's meant to be used as a currency or for whatever use it's meant, then it doesn't technically trigger the Howey test to say that it's a security. Now, we do know that the active management for certainly makes it seem like there is now an interest for participation. There's also been discussions in the past about an ability to affect the supply and the value. In the case of Ripple, this was a major component because they have a centralized entity that owns a majority of the supply and therefore can affect the value overall of the token. So the ability for the organization originating the tokens effect on the token may have an effect on whether it's a security or not. Ultimately, it's very complicated because a lack of definition tells us that we have no idea who regulates this. Is it the CFTC? Is it FinCEN? Is it the SEC? This is why Kyle and I have been constantly and consistently vocal about the need for governments to define security tokens specifically. We've started to see it happen around the world. This confusion around stable coins is exactly part of the problem, and why we encourage the SEC in the United States to also define security tokens as well. And ultimately, I think the ramifications can be pretty serious. I mean, ultimately, it can thwart a lot of the adoption of these stable coins. Ultimately, their goal was to simply keep digital assets in a digital format as opposed to having to cash out into traditional fiat. You can now do a stable coin pegged fiat and keep the entire portfolio digital, if you will. And of course, if it becomes a security, you're now required to register with the SEC. You now have a compliance wall that's probably going to prevent a lot of usage from the day-to-day
Shareholder
limits, the whole shebang, right? So yeah, I think this is a rather serious subject. Ultimately, my opinion is we need this defined. I hope that this cause by Representative Sylvia Garcia is going to make an impact and force a response, but we'll see. We'll of course be watching.
You know you'll get the updates here. As always, check out our news. We post all of our articles in the description of the YouTube, as well as through every podcast provider. And all of our news is sourced from stomarket.com/news. So definitely go on there, check it out, vote, comment, and post your own links. If you have stuff that you want us to see, you can reach out to Herwig or myself through Twitter, LinkedIn, wherever you can find us. And I'll talk to you next week.
We're curious. Tell us what you think stablecoins are and your logic behind it. Maybe we'll cover it on the next episode. As always, catch you next week.
Talk to you soon.